So have you ever had an amazing day on the market? You identified a great trade, you made a ton of money, you feel really good about yourself, but then later in that day, you're sitting there questioning, can I do this again tomorrow? Do I have a repeatable approach that I know exactly what it looks like, but more importantly, when I see it, I know how to execute. See, today in this video, that's exactly what we're going to be talking about, right? There's many of traders out there trying to show up to the market and they're doing all right, but they do not have a repeatable approach. They do not have that confidence inside of themselves that they know, hey, no matter what the market gives me, as long as I can identify my criteria, I know it works. See, I've been trading for 6 years, and throughout these 6 years, I've come to the terms until you've identified and created a consistent approach, a consistent input, you will never have a consistent output. And over here at High Performance Trader, that is what we pride ourselves on. We pride ourselves on having a very simple approach that's very easy to repeat because we understand the importance of the law of large numbers. And that's what we're going to be talking about today, right? The day I want to talk about is Friday, 1/24/2025. And what I want to show you is how we took two trades, right? Took two trades, made $995, right? It was a phenomenal day, even though one of those trades was a loss, right? So, once again, while trading, you have to come to terms with the fact that you are going to lose money. Not every trade is going to be green. This was a massive issue of mine for a very long time, right? I would associate my worth on my last trade, and if that last trade was red, I would feel low about myself, and that couldn't be further from the truth. You cannot define yourself on one bad hand of poker, right? If you get pocket aces, right, what are you going to do, not bet on it? You have to. So my goal in this video is to help you guys learn what that pocket aces look like, right? What is that repeatable approach that when you see it, you must pull the trigger and act? And today in this video, I'm going to show you what it is I call a repeatable approach, right? And it's very simple, right? So come over here, let's pull up the day we're talking about. And just a quick little breakdown, right? We are currently trading at all-time high territory, right? The market is extremely volatile, right? In the last 4 days here, the market has rallied over $20. Trump's back in office. He's making big moves, right? The economy's very bullish. All of these external factors, you cannot allow them to weigh on your decision-making process, right? And basically what that means is regardless, if you're a day trader, you have to understand you are not here to play the long-term conditions, right? Yes, you can use that as more of a context, but your job is to identify little pockets of opportunity throughout the day, right? So you cannot allow external factors to factor into your decision-making process. Otherwise, you're going to be always against the curve, right? So you have to define that repeatable approach. So every single day I come to the market and I look for three things, right? So number one, the first thing, and anybody that wants more information on this approach, anybody that wants to join an effective team, click the links below. In the links below, you're going to see I provide high-level summary, data review reports in PDF form of my strategy. I think it's extremely important to have confidence in your strategy, and the only way to truly believe in it is to collect data on it, right? Men lie, women lie, numbers do not lie. So click the link below, subscribe to my high-level summary data reports. They are highly effective. They are going to give you the confidence you need to actually trade this repeatable approach. And then below that, you're going to see links to join my course, Trader Bootcamp. This will give you 12 months access to our Discord. This is a certain promotional offer that HPT is giving right now, so take advantage of it while you can. You're not always going to be able to get 12 months access this cheap, right? So if you're interested, click the link below. The course comes with over 20 different mini courses breaking down market context, day trading strategies, risk reward, how to log and create your own data so that you can build that confidence, control, and conviction that we talk about, right? So click the links below, get affiliated with HPT. I am here to help you become the absolute best version of yourself, right? So without further ado, let's break down that edge. Right, so we were trading live this day, right? And I got to the market. I dropped my daughter off at school. I was back in front of my computer around 10 o'clock, and you can see I turn my computer on, and we get this massive red engulfing candle, right? So previous all-time high was at 609.04. Price rallied above it. And number one, the first thing I do each and every single day is identify open print. Right? So I don't have time to go into it today, but if you want more information, you have to learn what the pit numbers are. The pit numbers are previous day high, low, open, and close. The previous four critical levels of a daily time frame candle, right? These are the pit numbers. In addition to those pit numbers, you have to watch open print. We watch these levels because the amount of volume that goes into these levels. We can't move price, the banks do. So it's up to us to determine what the banks are doing. See, this is a philosophy you have to understand if you want to adopt this repeatable approach. You have to realize, you have to come to terms with the fact that you cannot move or predict price. You have to stop trying, right? Because every time you're trying to predict things, you're using those external factors to make your decisions. And that is why you are looking back at your trades and going, dude, what am I doing? Right? You have to be able to be like, all right, I can't move price, the banks do. What tools can I use to determine what the banks are doing and then make my decision off those tools? What tools can I use? Number one, critical level. Number two, moving average cross. You need to be able to identify price shifting from bullish to bearish or bearish to bullish, right? You're going to see here, price rallies up, comes down, falls below open print. This is very significant, right? Falls below open print. Now we come up and we retest open print. I want you guys to notice right here. Look at the moving average, right? I have the EMA cloud and I have the 9D EMA here, right? See, when you can start, and I have videos on this, when you can learn what is a healthy trend and what's an unhealthy trend, you're gonna make way better decisions in the market, right? Basically what this means is I only want to trade trends that are healthy. I don't want any extensions. I don't want any erratic or violent price movement, right? I want the trend to be gradually moving in the direction that I'm looking to trade. And this is what I had, right? This was a beautiful setup. Price came down below open print. We came up, we retested open print, and then this red bar ignored the green bar in front of it, right? So that's the third step to our criteria. The green bar or red bar, in this case it's a green bar, needs to be ignored. What does this mean? What this means is these buyers that just showed up to the market just got trapped. They just got disrespected. Sellers just showed dominance. This is the direction I'm looking to trade. I hop in the market short. First target is 609.04. Second target is 608.69. And we got our move into 609.04. I was up around 22%, 23% on this trade, trading SPX puts, and I didn't take my profit, right? So I allowed price to come into my first target, and then I made a conscious decision that I was going to hold targeting pre-market low. Right, and we have a live video of this. If you want to watch it, just go to my YouTube and click on Discord live trading, right? Because I post these live trades, right? So price came into 609.04 and reverses on me, and then I get stopped out of my trade, right? But this is the thing: this trade was a pocket ace. This approach works. As a matter of fact, it works 77% of the time according to the data I've collected, right? So am I going to base my value or base my confidence off one or two losing trades? Absolutely not. I'm going to take a step back and come back to the market and reevaluate for more opportunity. And that's exactly what we did. That first trade was a loss, right? And then we end up coming back to the market right here. So my daughter had a half day of school. I went and picked her up. We get back to the market around this 12:30 mark, and you're going to see price now comes down below the level that I was first targeting, this previous all-time high, right? So we identified weakness down here. How do you identify weakness? Once again, you use the moving averages, right? Buying weakness. Look at how price reacted to the level previous in the day, right? Price came into it, and then buyers showed up. They showed a lot of strength, tons of volume down here. And then now price is coming back to this level, and we're breaking below it. Look at the trend. We have a very healthy trend, no extensions on a 5-minute time frame. This is exactly what I'm looking for to get back into the market. I just need a way to determine my risk. How do I do that? That third and final step to our 3-step criteria. You identify the RBI or GBI, right? Price comes down. And what's going to happen here is you're going to watch price get away from you. It's going to be selling off. But you're going to remain patient. You're going to go, hey, I know, yeah, I can enter into this trade right here, but it's not a repeatable approach. FOMO does work every once in a while, but it's not a repeatable approach. It is not the way, it's not the way that you're going to sleep well at night. If you want a repeatable approach that you know works, you have to actually follow it. And that's exactly what we did. We allowed price to come in a previous all-time high, come into pre-market low, and then we got our green bar that was ignored, where we then took the market short. And if I pull up the Discord here, I'm going to show you, come to SPY alerts. Where we at? Where we at? Where we at? Where are you? Right here. Okay. At 1:12 p.m. targeting 60782 here, right? And you can see we got the green bar ignored in short, stop above it, right? Notice here, I want to make sure everybody on my team knows exactly what I'm doing and the candles that I'm making moves off of, right? And that's why I highlighted this green candle. Green bars, been ignored, healthy trend, let's go. Right? And then price starts to consolidate a little bit. But notice here, we never break the high of the candle I got in on. Right? So once again, the trend is my friend. I'm following trend. Market structure is telling me, hey, listen, sellers are in control. Let's target 608 or 60782. And then we started to really get nice rejections out of this area of value here. Notice price is coming into it, reject, reject, reject. Right? This is 30 minutes of price action here where I'm just going, hey, until we break that zone, I'm staying in the trade. And then you can see we really start to sink here. I trimmed, and then coming into 60781, notice where I'm getting this here, right? A clean break in a retest. This is a bullish chart pattern at 60782. But if buyers fail here, she is going to sink. And that's what I say, large time break and retest. We snap, she's going to sink, and then we snapped, and then we just started to really sell off extremely well, right? So this was a beautiful trade. I was extremely pumped. But, you know, looking back at this, right, because I post in the Discord here a daily recap, the biggest thing I want to point out and that I'm thankful for is my approach, right? Once again, pocket aces aren't always going to make you money, but when you get pocket aces, you have a higher probability of doing better than the other person. Therefore, you bet on it. That is the philosophy you want to have while trading, right? The strategy isn't going to always work. I know that, right? It doesn't need to. I just need to be able to manage capital properly when it doesn't and when it does. I hope you guys enjoyed this lesson. If you guys want more of this, make sure you hit a like, subscribe for more content, comment below if you have any questions, and get affiliated with HBT. I want to send those data reports to you to help you become a way more confident trader. I'll see you in the next lesson.